On today's Rebel's Edge live from Cardoon Studios in beautiful Aventura, Florida. Global slowdown? I don't think so. The latest MSCI numbers showing corporations around the world are doing pretty good despite Trump's trade wars. And then car companies were supposed to be among the biggest victims of the tariffs. GM to the market, hold my beer. And finally, is there a new meme stock out there? We'll talk about why Beyond Meat has been absolutely crushing it, and there might even be a short squeeze in play. We'll cover all that and more on today's Rebel's Edge. All right, welcome in, Rebels. Another fantastic episode of the Rebel's Edge. You'll notice, however, that neither Pete nor John are here. You're gonna have to make do with me, Marc, LoPresti, CEO, Senior Market Strategist at Market Rebellion, the nation's premier place to become a better, smarter, more profitable, independent trader and how to move the odds in your favor like the smart money. But you know that already because you're watching. I'm joined today by the incredibly talented, a workhorse as well, Justin the Prodigy Nugent. Justin, good to have you with me today. It's always a pleasure to have you.
Always good to be here, Mark.
And there's so much going on. We continue to have a market, notwithstanding the fact that the government shutdown continues day 21. For those of you that are counting, we're still not in the longest shutdown on record. I think we're in the number 2 spot thus far, but the market continues to rally. We see a little bit of selling pressure in some of the tech names, definitely a little bit of selling, taking some profit, I think, in some names that have run up absolutely amazingly. Justin, in the macro minute, what are you looking at?
I'm looking at kind of a similar thing to what you were looking at and what we're going to be looking at throughout this show, which is that there are some names that have really, really ripped, that maybe don't have a ton of profit, maybe don't have a ton of revenue, that are taking a little bit of a haircut, and maybe rightfully so. But if you look at the broader market, you look at Apple yesterday, up a lot. You look at some of the names that are really generating real deliverable value to shareholders, doing pretty well. You look at the broad market doing pretty well. And if you look at the type of names that are performing today, it's a sector of stocks that you've really been pounding the table on. Those national security related names are also doing very well. I think it's much needed for the market.
Yeah, there's absolutely no doubt. And look, the critical minerals party continues. President Trump announcing this morning an $8.5 billion with a B deal with Australia. Australia, not everybody may know this, but Australia is actually one of the world's richest repositories of those critical rare earth minerals, those things we talk about so much that go into not only consumer electronics, microchips, all your smart devices, but even more importantly, into defense, into drones, into guidance systems. That stuff currently comes by and large from China. Justin, as I think you know, when it comes to rare earth and critical minerals, China mines 70% of the world's supply, but they refine 90% of the world's supply. I think that's a big reason why this is at the top of the president's agenda. And you and I covered it in the Manhattan Project, that research report that we released at the beginning of the second quarter of this year.
We absolutely did. And we keep seeing UOA in these names. I'm telling you, the smart money has been on it with these things. This is something we really, really keep looking for even now. The stuff in the Manhattan Project report, in my view, is still very, very relevant today. If someone out there hasn't read it yet, would highly recommend. It is entirely free on our website.
Yep, absolutely. If you go to our website, www.marketrebellion.com/get started, you can click and download that report. You can also click and download our AI report. And I know you're all anxiously awaiting. It is just a week or so away, folks, I promise, from the much anticipated quantum research report, where Justin and I are going to be breaking down what is inarguably, in our humble opinion, the next big thing, going to unseat AI as the throne, the king of next generation tech, and it may, in the process, break the internet. So look out for that coming out. Let's hit fantastic futures real quick. Justin, it looks like the gold party may be cooling off a little bit. Silver as well. Gold price is down 3.6 when I looked this morning to about $42.64 an ounce. Silver down even more at 5%. What do you make of that? I mean, Gold has continued to defy expectations in a rally that started. I remember we were talking about it on the show last year. Gold was around 2,200. Goldman started putting its first significantly bullish call on the precious metal. What do you make of the sell-off in the last 24 hours?
I think the same thing about gold right now that I thought kind of the SPY 2 Fridays ago, right? Nothing goes up in a straight line forever. You can't expect anything to just continue to rally endlessly. Obviously, there's still a good gold story. What I really think, though, is that investors, traders, everybody should not forget that on Friday this week, we're expecting to hear some CPI data. We're going to hear the cost of rotisserie chicken and heating oil and shelter and everything else in between. And CPI matters with rates, matters with gold, as it does with the VIX, which was going to be my fantastic future. Pete's not here, but I'm going to carry the VIX torch for him.
Do it.
We saw some put buying, talked about it on the cocktail hour on Friday in the VXX. That's the short-term VIX. And I could not have agreed more with them at that time. The VIX was elevated. We were already recovering off of that 50 MA in the SPY. It's a spot we had talked about a ton leading up to that moment. And what do you know? The short VIX, or the short-term VIX, VXX, has moved from 38 to 33.58 in a short matter of days. Just a great reason why, as Bill Johnson often says, it's not always fruitful to go out and buy insurance when the house is already on fire.
What do you make of that, just real quick, Justin? Is that reason to be concerned? When the VIX gets elevated, particularly the short-term VIX, that's an indication, of course, that traders are expecting enhanced volatility. It tends to correlate to some bearish activity. What do you make of it? Does it give you cause or to be worried about whether or not this bull run can continue in the short term?
So glad you asked that. No, it's the opposite for me, actually. I like to look at it the same way I look at the AAII investor sentiment. If everyone's on the bull side, that's a reason to get concerned about the short-term bullish trend, in my personal view. And also, if we're dipping below key technicals, that would be a big reason. If just a bunch of people happen to be hedging, if the put-call ratio is elevating, if a bunch of people are buying the VIX, usually by that point, the news is already out to everybody. That's a point where I really like to buy the dip for the long term. Doesn't always mean you're going to catch the bottom. In fact, rarely will you ever, but it usually ends up being, in hindsight, a great idea. That's what I would say is usually the right choice.
Yeah, I love that. And of course, I tend to agree with you. As traders, we need a little volatility, right? If things just go sideways, hard to make money, and stocks do not just go up. And when you talk about what everybody is doing, and this is a stock, look, Pete's not here, John's not here, so we're not going to have, I know, Q, the sad sigh. We're not going to have Pete's Red Zone Sports, so we're going to do an extra stock for you. This is that stock, folks, that I teased in the cold open that may very well be the next big meme stock. You know what a meme stock is. When everybody gets behind it, they talk about it on these message boards, on Discord, Reddit, et cetera, et cetera. They pump the thing to the moon. Doesn't always end well. I am talking about Beyond Meat. This thing has traded 710 million shares so far today. That is absolutely insane. It traded 1.2 billion shares on Monday. And there's a couple of things here at play with Beyond Meat. BYND is the symbol, of course. Listen, on Friday, it went up 52 cents, 25% move on Friday. Monday, it went up from 65 cents to $1.47. That is a 126% move for those of you that are keeping score or playing the home game. Today, it's up another 46%, hitting $2.15. What's behind this? Is it just a meme stock story? No. It's also looking like a significant, and we got to give credit to Jeff Garbaz and his team over at the Rebel Screes Play and the Rebel Morning Setup and Morning Call. Look, the company announced last week they had a tender offer for their convertible, to exchange their convertible notes for stock. That actually drove quite a lot of interesting buying. 316 million new shares came into the market as a result of that transaction. But at the end of the day, this is a company with a short intensity, and that is it's something that Jeff and his team with Mr. Erlanger came up with. It's their own way of measuring the level of short interest, the level of short pressure on a stock. It's actually going to be coming out for members of Mark Rebellion in the form of an indicator. That's a little tease there. More on that soon. But 100% short interest in this thing. Justin, it looks like the shorts are getting squeezed big time. And there's been a hell of a lot of options playing in this. Have you been following this Beyond Meat story? What do you make of it?
Yes, I have. And funny enough, I actually talked to Jeff this morning about this name. We're both pretty excited about it. I don't want to jump out and speak for him at all, but I think we both share pretty similar sentiment. What I thought was really interesting in Jeff's work, and again, full credit to him on this, is that as we're seeing this big pop, you are seeing a huge surge in the short ratio, the shares short. I think it's really, really interesting in the style of these short bettors, these short sellers, how wrong they've been since April, and yet how committed they are to kind of executing the same strategy where they're just chasing these names that start to rally that maybe don't have a ton of money behind them, and are just aggressively shorting them. And it's like, how much meat is there really on the bone? The stock's like $1.50 today, or so, $2.32. Sorry. It's an interesting thought that probably gives more jet fuel to that rally. And it would not be surprising to me if they pulled an open. And I would just hearken back. This is the last thing I'll say to the open traders that were very successful in our UOA, although we have not seen big UOA in this name yet, which is what they did is they went out a little bit in time and they were willing to hold through some of that volatility. They were not getting psyched out by the ups and downs. If we get a nice little pullback and beyond, that would be where I would like to enter. I would probably do it with a little bit of time and with a very risk managed position where I understand how speculative this is, and I'd be willing to sit through some of those ups and downs, because if we do see a rally, it's going to be the type that is big in my view.
Yeah, no doubt. And folks, if you like Justin's insights, well, I got good news for you. We are going to be coming out with a Rebel Roundup Pro version of the wildly popular, highly successful from a track record perspective, Market Rebellion Rebel Roundup, written entirely by Justin. We're going to be doing a live webinar a week from Thursday. You know, we like to do those webinars on Thursdays. It's going to be at 4 p.m. Eastern. Producer Jared, if you could pop a link or a way that folks that are watching this can come and join us. We'll be sending out emails to folks, so if you don't catch that link, if you're not watching us live, we'll put it in the bottom in the YouTube link as well. But you will be getting an email from our sales team about that live webinar. So mark your calendar, save the date. That is, I believe, what, Justin, the 30th of October, the night before Halloween, 4 p.m. Eastern time, right?
Yep, spooky date.
Beautiful, beautiful. The eve of Halloween. Justin, we got a few more names to talk about. Tell us what we saw in General Motors. Let me let you kick that one off.
Yeah, all right. So General Motors, obviously, engines are roaring today, right? 280 EPS beat, revenue topper. Shares are up 11.3% when I last saw, which is huge. Raising guidance. Full throttle ahead. That's EVs included, from beating sales forecasts to slashing EV losses by 2026. GM's proving it's not just cruising, it's dominating the auto highway. And I believe we may have seen, yes, we did, some unusual options activity in this name as well.
I love it. That's always a great one. And, you know, look, this is one of those stories, as I teased in the cold open, that has defied a lot of the expectations that we had, certainly before Liberation Day, even after Liberation Day, that the automakers would be among the ones that are hit hardest by the tariffs and the trade wars, by potential restriction to rare earth and critical minerals. I mean, Justin, do you think if there is this continued pressure from China and from Beijing, which I fully expect, to use these rare earth and these critical minerals as a bargaining tool in their negotiations in the trade war with President Trump in the United States, do you think that they could continue to put up these numbers, or do you think at some point we're going to start to see a little bit of pressure?
I mean, I'm sure we'll see pressure. That's on again and off again. Is kind of the nature of the GM trade for a really long time. Anyone who's been trading in and out of this knows that this has been a tough long-term hold for a lot of people. And in my view, this is really one that's best played with unusual options activity. It would not be necessarily something that I would say this is going to go up in a straight line or is going to have a forever upside. Personally, I can speak to what they did with the unusual options activity, which is that at least right now, they have continued to hold on to that position, but I do not believe they have added to or pressed that bet at all. And I just talked to our unusual options activity analyst this morning about this particular name, so that is pretty recent data.
I love it. I love it. All right, let's talk about A sector that's near and dear to my heart. I'm talking about the oil and gas industry. Halliburton reporting Q3 results this morning, beating the street's estimates by 50 cents. Sales exceeding 5.6 billion, also beating the consensus estimate of 5.39. However, and this should be no surprise, folks, given how oil prices have been so far this year, it's great at the pump, but it's not so great for companies that are taking this black gold out of the ground, refining it, getting it to us. And certainly Halliburton, this is an oil and gas equipment and services, an oil field services company, one of the largest in the world, if not the largest, indicating that there has been a fairly significant decline, almost 75 cents a share on a year-over-year basis. The firm announcing that they're going to be generating some cost-cutting measures, looking at what they do when in the oil patch and other parts of the oil-producing world, when oil prices are low and low at these sustained levels, they try to sideline or mothball, at least temporarily, some of the assets that they use. Look, I think, Justin, on this one, just to bring you into the discussion, I know that bringing drilling and bringing lifeblood back to the U.S. Oil sector is on the president's list of priorities. I think he just hasn't gotten to it yet. What do you think? First of all, do you think I'm right about that? And secondly, what do you think it would take to see oil prices go up so these companies can do a little better?
Well, so I do think you're right about that. There's a lot of meat on the bone in what you just said. I want to talk about ET because honestly, Hal is doing great today, right? And, could they go up to maybe 25, 50? Sure. But what I'd be more interested in here is the dip that this sort of generated and exactly what you were just talking about. The names that are more akin to like ET, these midstream type names, I think there's probably more of an opportunity there in my view. In terms of what it would take to make energy prices rise, that I don't know. I'm not sure.
Fair enough. And look, folks, Justin brings up ET. That's a absolute a pillar or part of the foundation of my personal portfolio. This is a high yield dividend payer. They are one of the best in that midstream space. They move oil and gas from the downstream to the upstream folks, the people that take it out of the ground, to the people that actually make it possible for you to put it in your favorite gas guzzler. Take a look at that one. It has definitely been trading in a fairly low, sustained $16 to $17 range. That stock off about 9 or 10 cents today. Justin, we've got a lot more to cover. Let's move on to another space, literally, no pun intended, that is hot and I think will continue to be hot, particularly as we move the manufacturing and production of more of the supply chain for our defense industry here to the United States. It's part of that critical mineral story. Of course, I am talking about RTX, Raytheon, everybody's favorite aerospace and defense company. What do you make of this one? Raising their full year guidance from $610 to $620 a share, up from $580. Consensus estimate, $5.95. Also increasing their revenue outlook. Are you bullish on this thing? Are you bullish on the sector, aerospace and defense in general? And if so, why?
Okay, yes. And I really like this name because there's a lot of more speculative names in this space. You got your AST, your Rocket Lab, which, by the way, I also like. That's no shade to those names. But aerospace and defense could not be a sector without RTX. I think when you talk about these national security indexes that people are starting to put together when we're talking about, hey, who's going to get the handout, the next handout from the government? We know that there are probably going to be more. RTX has to be on everybody's list. And also, I just have to say 3 words, 251 billion backlog in RTX. Their defense demand has been cleared for takeoff. They are just really in a phenomenal space, not just for today, but for the future.
Yeah, listen, I totally agree. I think it's not just those handouts. I think we could see, and this is a name that's been bantied about and rumored to be potentially on Secretary Hegseth and President Trump's list of companies that the Pentagon might take a stake directly in, as they have in some of these critical mineral companies. That makes perfect sense to me. It was actually interesting. Bill Ackman was on Squawk Box this morning talking largely about that Curtis Sliwa needs to drop out of the mayoral race in New York so that Andrew Cuomo can prevent the election of radical socialist candidate Mandami. And Curtis, if you're watching and listening, listen, we love you, but it's time to step aside and do your civic duty and make sure that Mandami does not get elected in my great home city of New York. But one of the things that Bill was also talking about with Andrew Ross Sorkin this morning was how President Trump's policy of investing, not just handouts, not just grants, not just tax incentives or tax credits, but investing in these companies that are critical not only to infrastructure but to the national defense, is a much better alignment of interest between these corporations, shareholders, and U.S. taxpayers. Could not agree more. By the way, while we're on that subject, I'm going to give you one more bonus stock before we hit the last one that's in the run. Justin, I don't know if you noticed, and you probably have because you've been working hard with me on that quantum research report. One of the names that we're going to cover in that report, a little-known Canadian name, Quantum Emotion, QNCCF is the symbol. When we first talked about this company on the Rebel's Edge, I think it was about the 10th of October, stock was trading around $1.30. I think the low that day was about $1.36. Stock again today up another almost 6%, $2.40. Congratulations to the Rebels that listened. Got a piece of that. I know some of you did. I've gotten some emails, text cards, and letters with thanks and expression of gratitude for that one. Quantum is just getting started, folks. Keep an eye on that one, and we'll cover that and more in the upcoming research report. Okay, Justin, one more that the boys wanted us to cover. It's a plastics company. Can't say that it's one that I am terribly familiar with, but as Chevy Chase famously said in the movie Fletch back in the day, it's all ball bearings these days. So I guess it's also all about plastics. What's going on with Crown Holdings?
Well, they're up like 4% today. They increased their fourth quarter guidance to $1.70 per share, which is good. It's not a name that I'm hyper familiar with either, Mark, to be honest. But it does look like they raised also their full year forecast. Just kind of a general turnaround story here after that pretty big dip, it looks like. Now, in a name like this, I like to look at how they're holding up on the day specifically. And I like to ask our UOA team if we've seen anything in it so that we can know, hey, is this something that I should really put on my radar for the future? And just give me the honest take. And our UOA lead told me, no, there is nothing. So I said, okay, well, I guess it's a name that's ripping, and that's all I've got then.
Yeah, though, there you go. I mean, listen, they look like they're in the business of consumer packaged goods, providing, products that I think are involved in the food services industry and things of that nature. It is good to see companies like that surviving and doing well. I think it's a broader indication that the economy is doing even better than expected. And by the way, folks, I'm not sure if we covered it, but when we go back to that GM story, just really quick, producer Jared, if you would just pull up the graphic. We had unusual on the 17th of October in GM. They came in and bought almost 5,000 of the November 21s at $57.50. That obviously turned out to be a harbinger of things to come. If you want to get in on more unusual option activity like that, to trade on the same signals that I do, John does, Pete does, Justin does as well, you got to be a member of Market Rebellion. Go over to markrebellion.com/get started. Also want to remind everybody, a week from Thursday, we're going to be hosting that live webinar, 4 p.m. Eastern time, with Justin to talk about the new Rebel Roundup Pro service. Justin, you've been getting so much interest. I think that one is going to be an absolute doorbuster. What do you think?
It's going to be incredible. This new service is something that I've been dreaming about for a long time and that we've now been testing out on the back end. It's going to be something that we have never done before, and I would highly, highly recommend everybody check it out. I'm a very competitive individual, and I'm going to make sure that this does not disappoint anyone. And if I could throw in one last thing about that GM UOA, that's really interesting, because I did ask about this as well. Like I said, they remain long this, and check this out. It wasn't even just that one bet on the 17th. Out in November, they also had 10 days before that, 10,000 of essentially the same calls. And what is this? About 13 days before that, another 11,000 of those very, very similar November calls. Very, very interesting when they come in and hit again and again and again. It tells you, hey, they really, really like this. And it helps you be a little bit more selective and say, I think if they really like that, I really like that.
Yeah, for sure. Anytime we see people doubling and tripling down, as we often say at our boot camps and our other live events, that gives us just more conviction that the signal we're getting from the unusual option activity is valid and good to get behind. Folks, we're going to be coming to you tomorrow for the Rebel's Edge from the beautiful Breakers Resort in Palm Beach, Florida. It'll be Pete and John, or myself and John. Not entirely sure yet. John, Pete, and I were going to be there for a conference for the next couple of days. We're very much looking forward to that. We're looking forward to having you join us in beautiful Miami, Florida at the Fontainebleau Hotel for 10X Wealth. That's December 11th and 12th. Mark your calendar for that. You'll be getting an email from the sales team with ticket options, pricing, discounts for our VIP Rebels. We always love to see you in person. And Justin, it's always great to be with you. Thank you so much for pinch hitting. It was another great episode of The Rebel's Edge. Folks, until we see you again tomorrow at 1 o'clock Eastern time, as we always say, trade smarter.